You just heard Bob Pisani reporting about the complexity that this September holds. What exactly are investors that you speak to thinking about, and what are you doing about the September markets?
Well, morning, first of all, Dom. It's absolutely right that the market is likely to be quite complicated over the month of September as we come into the end of the year. And there are several macro and geopolitical issues which are coming to bear. There's the ongoing fight against inflation, the trajectory of the Fed. We have the US presidential election, and of course, the war in the Middle East in the background as well. And all of these things do have the potential to discombobulate markets and discombobulate investors. I think certainly this week is important from a data perspective because of the jobs number and ISM, which we're going to see today and Friday. And I think that in both cases, maybe things have calmed down a little bit from the dislocation which we saw a few weeks ago. And certainly I don't think we're likely to see that 50 basis point Fed put. But however it is there, markets may well find that quite reassuring, as well as the fact, as we've just seen in the previous section, that the broadening out of markets, I think, is very positive for ongoing progress as regards the major indices.
At this point, is there anything that can happen with the data that we anticipate on the jobs and inflation front ahead of the September rate meeting that could upset what the markets already see as a certainty in terms of rate cuts at this time and in this point for this month?
Yeah, so my sense would be that this is a question of quantum rather than if. So I think that unless we see a very significantly higher inflation number and a lower or a higher job creation number and a lower unemployment, then we're unlikely to see the Fed stand pat or put rates up, and that's off the table. Certainly the latter is off the table. My sense is that between 25 and 50 basis points is the choice. I think the real bogey number maybe for the jobs number is below 100,000. I think if it's below 100,000, we are likely to see a bigger, more aggressive cut from the Fed. But the base case scenario here, I think, is that that number is above 100,000, but we see 25 basis points as inflation pressures start to fade away.
Paul, the individual stocks that have been driving a lot of the story around the markets for the last arguably maybe 2 to 5 years at this point are those mega cap technology names. I know that they are ones that are broadly owned. They are maybe in some trouble, at least in some investors' minds, with regard to valuations. Can you take us through, as a portfolio manager, what it feels like or what it looks like to deal with the kinds of valuations we're seeing right now?
Yeah, I mean, it's a great question, Dom, and certainly for the last several months now, or really maybe the last year or more, since particularly the AI story has come through, it's been necessary to go further and further out in terms of future earnings in order to justify some of the multiples which we see. There is no doubt that Nvidia, is the 200-pound gorilla in this space, and from that perspective, you can probably justify to some extent on a long-term basis its valuation. I think in the shorter term, there is a little bit of a challenge, which is firstly that it's very well owned. There are some regulatory restrictions for portfolio managers in publicly listed funds around how much they can own in individual stocks, and that may well cap some of those very large mega cap names in the market. But also, it's not just a bifurcation between tech and the wider market. It's also within tech. There's the sort of higher growth AI related names and some of the more commoditized names which may have a cyclical challenge. So I think it's easy to try to replicate some of these growth dynamics by buying lower multiple stocks, but they also come with more challenges, more headwinds, and more difficulty in terms of creating the new products to rival Nvidia or to get up to speed with the AI story. So it's really caveat emptor there, whether or not you're willing to swallow higher multiples and trust that the growth will continue unabated, or to maybe lower the heat a little bit around valuation, but take more of a chance around business strength of the individual company which you're investing.